Hello and welcome to a special one-off video regarding the latest action by the PBoC. So as I'm sure quite a few of you may be aware by now, we have seen some action by the PBoC overnight whereby they've weakened the Chinese yuan's reference point against the US dollar by 1.9%, which is the most on record. So effectively, in essence, what this means is, so basically the Chinese yuan currently operates in a trading band system whereby the Chinese yuan is allowed to fluctuate by around 2% with regards to a specific reference point. So in doing this, the PBoC effectively shifted this trading band and devalued the Chinese yuan currency. So the next question is why? So why have the PBoC done this? So basically they've really done this due to concerns over Chinese exports, with some bringing into question as to how strong the Chinese yuan is and whether the Chinese economy can actually withstand the strength of the currency. And secondly, another factor which some people are paying credence to is the desire by China to become part of the IMF's SDR, the Special Drawing Rights Scheme, and therefore effectively be used as a reserve currency. So just in terms of the overall market reactions, at 2:15 AM London time, we did have the offshore Chinese yuan which opened for trade, and that weakened by 2.25% against the US dollar. So given the stronger dollar, we did see the dollar weigh on some of the emerging market currencies, with some analysts also speculating whether other EM central banks will potentially need to take measures to devalue their currency to remain competitive against the Chinese economy. And secondly, we did also see some downside in the Australian dollar, given that some of the trade ties that Australia do have with China. So just in terms of a latest developments in terms of price action in the market, so despite the initial dollar strength, we've actually seen euro strengthen, so euro yen's printed a fresh 2-month high, with some desks noting a large unwind of a short euro yuan carry trade. As well as, let's also not forget, we've also seen some positive headlines for Europe this morning, so Greece and their creditors have struck a deal with regards to the third bailout. So therefore we have seen some of the gains in dollar given back, and dollar index does actually now reside in negative territory. Another key asset focus this morning has been fixed income products. We have seen a significant bid tone go through in US Treasuries. So one of the main factors behind this is that firstly, we've also pretty much seen a admission of growth concerns by China having had to take this action, therefore driving the safe haven bid. Secondly, the actual mechanism involved in the weakening of the yuan against the dollar will at some point involve buying US Treasuries, so that's bullish for Treasuries. And thirdly, one thing is this could potentially pose some sort of headache for the Fed, so given that this could lead to overall a strengthening dollar, this could potentially impact the time frame or path of Fed rate liftoff. Just in terms of other asset classes, did see basic materials initially weighed on by the stronger dollar. However, as dollar has given back some of its gains, we have seen a bit of a reprieve for the metals and energy complex. Then elsewhere, just in terms of equities specifically, we've seen particular weakness in the consumer discretionary sector. So a lot of the auto names like BMW, Volkswagen, Daimler all getting hit this morning. This was also coupled by some disappointing Chinese vehicle sales numbers. So that's pretty much where we stand at this moment in time, and thank you for watching.